Hi, Daphne. It's Greg. Your question. So, for a swing trading perspective, the daily, weekly, and monthly charts are what most would use. Maybe not so much the monthly, but taking a look at it from a longer term perspective, sure, that makes sense. As far as how much data to put on, like I say, a daily going back a year, 3 years for a weekly, 5 years for a monthly, that's really not relevant. And if you look at what I'm showing you here, you could understand why, because I put on a monthly time frame and I go back 5 years, and what happened at that time is irrelevant right now. What's relevant right now is what happened in the last, say, year and a half or so. I'm just condensing the data on the monthly time frame. So as prices pulled back on the monthly, they began going sideways for several months and bottomed out, and now they're going up toward resistance. What's relevant is what's directly to the left. And this prior high on the Qs, that 400, it's a whole number. You see they backed off before getting there. This month is almost over. We'll see where it closes, red or green, or a slowing momentum candle, or a wide range bar. Whether it pulls back further, we don't know. As we go to the weekly time frame and we go back and say, is it relevant to go back 3 years? Well, no. Again, it's irrelevant right now. If we were going back and looking at, say, 2003, where prices had come down a tremendous amount from 2000, what happened 3 years ago could be relevant. But as we're looking at what's happening right now, and we expand the data into a smaller time frame, in this case the weekly, prices came down, and over several months they bottomed out. They started going up. They consolidated over there in April, May. Then they went up, and now they're pulling back. What's relevant right now is this. It's in an uptrend. It's pulling back. They began to stabilize today. It's only Monday. We don't know where this is going to end the week as far as continuing. On a daily time frame to go back a year, it's irrelevant. You can go back a few months, because right now, again, we can see they're pulling back. As we expand the data, we see more pivots, we see more ups and downs, we see more support and resistance, and now prices have broken down under support. They gapped down on Friday, they're moving up. There's resistance directly to the left, which is from last week, and now we're going to see what happens. So from a swing trading perspective, the daily is in a downtrend, the weekly is in an uptrend, the monthly is in a sideways trend, and maybe this is going to transition where maybe it comes down even further. Kind of looks like that's what it would do right now. Maybe, again, comes down to this next area around 350, and then begins to form a buy setup on the weekly time frame, and we'll see what happens on a monthly. It could be a red bar ignored. But I think this should set you straight as far as how far back you need to look. Where do you see something as you start to look to the left? If there's nothing there, well, then you need to go back and look further. Right? So as prices are making new highs, as they were here, there was nothing there. As prices begin to pull back, as they did here on the monthly, well, you look to the left, wherever there was some congestion, and it began to slow down at that point, is what you need to focus on. What happened back here in 2017, 18, 19, 20, 21? Irrelevant. So I hope that helps. If you have any other questions, let me know.